everyone. Welcome to another Off the Lips speaker sessions. Today we've got Ryno with us. I'll do a brief introduction. Ryno and his team are probably one of the first, definitely one of the first of our members and tenants at the Green Room in JBay. So super stoked about that, and super stoked that we're finally getting to talk to Ryno. The thing I find when I talk to Ryno is whenever he talks about finance-related things, I always hear about something that I've never heard about before. And that's surprising because I studied finance for 5 years and I'm actually an accountant, so I really should know about this. So it's always super surprising. Ryno is on another level of this stuff. The other thing that I notice when I talk to Ryno is that he'll mention something and maybe like 6 months later I'll read about it in the press. So this is the two things that always stand out about my conversations with him. So really happy that you can share with us today. Ryno is one of the founders of a cryptocurrency exchange called ChainEX. You're going to talk to us today about the story of how you got there, and then a little bit about DeFi, which is something I heard about the first time from Ryno, and of course now you read about it in all the financial press. So without further ado, over to you. We'll do the talk and afterwards Q&A, so hang on to your questions.
Cool. Thank you, Michael, and thank you guys for inviting me. So today I'm just going to talk about my cryptocurrency journey and I guess how I got here, how ChainEX started, how it was formed, and then the things I'm busy with in the DeFi space or the crypto space. So I first heard about Bitcoin in 2013. The first time I heard about it, it wasn't like under the best circumstances. A friend told me about it and he told me about its uses. Back then, the main uses were very nefarious. So I guess Silk Road, stuff like that. So I wasn't really interested up until I started working on a project at my previous company called MobiCred. So that was one of the first South African online lending platforms. So while we were busy with that, I was looking at online payment systems, and then obviously I found open source online payment systems and stumbled upon Bitcoin again. So at that stage I thought it's probably a good idea to get involved. I was single at the time, didn't have much to do with my time or money. I was just working, so I guess buying some Bitcoin was a good choice back then. And then all of a sudden in 2013 it started to explode. At the same time I left my job, not because of crypto, but because I felt like I've reached the top of my career as a developer working for someone. Next up it was like dev management and project management, stuff that I'm not really so fond of or interested in. So I decided to start my own development company. We started Lunatic in 2014. Back then I was mostly just working on my own, but while I was starting it, I decided to take about 6-7 weeks off just to recover from the previous job. And I started mining crypto. I actually bought a gaming PC and thought I was going to game quite a lot up until I found out that mining was actually quite lucrative. So in this time I spent a lot of time mining and bought more machines and started mining. Then I got my first software development gig for my company, and then pretty much 6 weeks later the company I was doing the work for went bankrupt. So I didn't get my first paycheck there, or I got my first paycheck, I didn't get the full paycheck, but after that I was quite deep in the mining, so I just decided like I need to do something, I need income, so mining was it. So I started writing some scripts and stuff just to check where I should be selling my coins and what I should be mining. There was also a website called Coin Wars. It's still going, but I don't know if it's as popular. But they tell you like what to mine. Back then you didn't have things like NiceHash or Hive OS, things that will mine for you where is most profitable. So we had to figure that things out. All the people mining back then just had to figure it out. And then mining profitability started going down heavily. So I thought, okay, well, I have a bit of crypto now, and I had been trading here and there, mostly just swing trading, buy here and sell there, just try buy high, sell low, or just trading between the spread, just to see if you can make a little bit of gains from that spread. So I saw that on multiple exchanges, obviously the prices are different. So I wrote some more scripts to just analyze the differences and just to send me an email when I should act on something, when there is a good difference, and then eventually automated that so that it would buy on one exchange and then go and sell on the other exchange. Then at a stage, it got this bot that I wrote bought into a trade, and then by the time it had to sell, it had lost 25% of its value. So I went to go look at what is going on. Saw on the Bitcoin Talk forums that there's actually no developer, or the developer that's doing the project doesn't know what is going on. But they had a good community manager, and they had a bunch of bounties. So anyone could go there and literally say, if they're capable, I'm keen to do the bounty, and then you do the work, and then the community funds it. So Bitcoin Talk was quite a good resource back then. And while I was doing that, I saw that there's actually a lot of potential to start your own coin. So I got involved with a few friends and people I met online, and then we started a project called Shadowcash. The whole thing, it wasn't supposed to be shady. It was all about the shadow economy. So underground investments and stuff that I guess your general public doesn't know about. And I guess after that, the community kind of wanted the more dark side of it. So we kind of pulled away from the community and rebranded the project. And then we launched Particle, which is now got a decentralized marketplace, also an anonymous cryptocurrency. The project's still going. I'm not really involved there anymore, but they just released their latest version of the marketplace. It's pretty cool. It's to compete against like eBay, Amazon, and stuff like that. Along the way, I also got involved with more people I met online, and we launched a project called Blocktex, which is a decentralized ticketing system, so event hosting and ticket distribution on the blockchain. So Blocktex is still somewhat going, although there's a lot of new projects like animal concerts, just to name one of them. I can't think of all the others, but there's a lot of people doing ticketing now, so it's not really a niche or something unique anymore. Well, just after we launched Blocktex, I actually met some of the founders of ChainEX now. We met in church. So they were into crypto, so was I, and we had already started working on exchange software, and then they wanted to start an exchange, so it was like quite a good fit. Had a lawyer, an accountant or chartered accountant, and then a programmer, and then someone else who was willing to fund the whole thing. So I guess the idea of ChainEX started early 2017, and the company was formed in October 2017 or November 2017, I'm not sure. And then we launched in April 2018. So ChainEX been going for almost 4 years. It's all about trading crypto. Obviously, everyone knows what crypto is now, so just being a crypto trading platform doesn't have any niche. So we're also looking at new things. What's the latest trends at the moment? That's obviously DeFi, which I'm going to talk about more. NFTs and the Metaverse is getting quite big, and gaming tokens like play to earn at the moment has a massive space in this whole ecosystem. So there's plenty of games you can go play now, even on the App Store, and you can start earning crypto just by playing games. Have some friends who were doing it like quite dedicatedly, or they were quite dedicated to it, and they were earning like thousands of dollars a month but obviously it's getting saturated as everything does. In the beginning, there's a lot of room to make money, but as with every industry, as soon as too many people start coming, everything's going to get more competitive and just drive all the margins down. So with DeFi, I haven't been involved in DeFi for too long. I only really started early this year. When it all came about last year, I thought it was just going to be a fad, like just another thing, just another name. It'll be around for a few months and then something else will come. And same with NFTs. I didn't think it's going to be as big as it is now. I thought, okay, you can tokenize stuff, big whoop. But now, as you know, like the rarity is giving these things lots of value. How I think DeFi came to be was with all these cryptocurrency exchanges, a lot of them had margin trading and leverage trading. So you were able to loan coins to buy more coins by putting down your coins as collateral. Then obviously, should the price go down, you'll get liquidated, same as every other trading platform. But then I think Poloniex, they saw you can lend money to people without having them trade. They can literally keep their crypto on there, lend the money, do whatever they want, and when they pay it back, they can get their crypto back. So I think between all these platforms, they started seeing what are the ideal ratios to have. So, and offering better interest rates for lending. And then obviously needed people to actually lend the money to those people who want to lend the money or who want to borrow the money. So there, like pretty much every exchange or every international exchange started doing the loans, but their interest rates were quite high. So then DeFi came along, where people were able to collateralize their crypto on the chain, writing smart contracts that will give them access to a fiat currency or maybe a stable coin, which they can then use to do whatever they want, as long as they are paying the interest and as long as they're maintaining a good ratio with their crypto holdings. Like if the value drops, you have to top it up. If it's gaining, you can obviously have more access to that. So these systems became more and more decentralized, and at the moment people are writing algorithms that will allow you to literally put your crypto in as collateral, and then they'll automatically go loan money against that, go buy more crypto, put that as collateral, loan more. So they're doing auto leveraging and compounding at massive rates. Some of the DeFi platforms, you can get like 50,000% gains per year. So it's huge. But then obviously they're using coins to back that, and there's always going to be someone who wants to sell. So the interest rate might be 50,000, but the value might not be going up, or it might be staying, or it might be going down somewhat. So your actual gains at the end of the day might be a lot lower. Platforms that I think are really good to get started, well, the DeFi platforms, it's like Auto Farm. Just by the name, you can know that they do everything for you. You literally put your tokens there, well, choose your vault, put your tokens in a vault, and then they'll do that compounding for you and do all the work for you. So they take a performance fee, obviously. So you deposit your funds, and then whenever you need it, you have access to your funds. Ways in which you can get started, obviously, is by buying crypto on an exchange like ChainEX and moving them onto the different chains. There's so many at this stage, but I think Binance Smart Chain, Polygon, and Avalanche are a lot of projects are working, like a lot of projects are building on those networks. So at the moment, those networks and Phantom, those networks are probably you're gonna find projects giving you the best returns on there. Okay, well, I guess when we launched ChainEX, all the other South African exchanges had like exorbitant fees. So we needed a low fee exchange in the country with really good support. The support was really lacking, and as well as a good range of crypto to choose from. Because back then Luno was the biggest. Now I think it's between Luno and Valor. But yeah, they're also offering very limited array of coins to choose from. So I guess you needed access to a lot of coins and good support. That was our main objective back then. Well, it depends on what stage the coin is. A lot of the coins you might hear about before they even launch, and you'll start seeing a lot of hype on Twitter, Telegram, stuff like that. Then obviously you need to start contacting community managers or those types of people to see how you can get involved. But after launch, probably looking at the trading volumes on different exchanges. Obviously, if a coin's got a lot of volume, there's something driving that. So I'd say that's a good indicator. I do, but I'm not doing it for profit, really. Well, obviously, I think gamers, like me and myself, I started as a gamer first, so I do think it's really maybe unfair to the gaming industry.
The price peaks and all that.
Yeah, because your entry into gaming is getting a lot higher now, which is probably unnecessary. Yeah, I think we're about 90% South African. Well, at the moment, it's all about the Metaverse. As you can see, even Facebook has renamed their main company to Meta. Mm-hmm. So I think all the different ecosystems are busy bridging to become like one larger ecosystem. But I think it's going to sort of morph with virtual reality and AI. Like they're all going to come together, I think, ultimately.
Okay.
Yeah. So like yeah, I think your metaverses are going to become like virtual reality games, and there's obviously going to be lots of AI trying to take advantage, or like in normal games you have NPCs, non-playable characters. So you're going to have AI that can like take part in the different metaverses, and yeah, but I think gaming pretty much is going to be a big factor as well.
Interesting.
Owning land in these metaverses and buying NFTs and trading, stuff like that. Yeah, I think it's probably the better way for things to do, or the better way for them to validate the chains. No, obviously there are issues with proof of stake where you can obviously be staking on multiple chains because you carry the same amount of weight on all the chains based on the coins that you have. But if you look at the things that they're putting in place, like penalties and slashing, stuff like that, to kind of really disincentivize trying to be a bad actor, I think it's definitely the better way of maintaining consensus. Sorry? Yeah, definitely. Well, I guess you can't really tell what's going to happen in the future, but right now that is something that's really hot. So if I just have to look at like when I thought NFTs were a fad 6 months to a year ago, it's the same like now. I think buying land is a bit ridiculous, but people are spending millions of dollars for plots in a metaverse that you can't even see yet. So I can't really give I can't say if it's going to be a good thing or not.
Or in the long term, buying a house, or however you want to reach your livelihood.
Well, there's marketplaces for these things. So obviously, the value is all driven, I guess, by demand. So if there's a lot of people who want it, then it's going to have, well, if there's a lot of demand for it, then obviously you'll be able to sell it on a marketplace. Otherwise, it works a lot like normal auctions. You'll just put it there and hope someone will buy it or bid on it.
You draw the cash.
Yeah.
And buy your house or buy your virtual yacht for.
Yeah, well, all these things are NFTs, so it's pretty much each of them are unique tokens. So you're just literally going to trade one, maybe a NFT for a normal token. So you'll maybe trade it for USDT, which is a stable coin, and then if you need to get that money back into rands, you'll then sell the USDT for rands.
Right.
I mean, I'll probably leave it at that. As with all of my conversations with Ryno, I'm left with a whole lot of new terminology that I've never heard of before that I'll probably read about in 6 months in the newspaper. But that was fascinating. Thanks so much for sharing your story and the time, Ryno.
Yeah, thank you. Thank you for having me.